Get live to that trading desk. Victor Adair kicking off a new year here. Hey, Vic, obviously at the end of the year, that period between Trump's election and December 31st, I think it was the best movement in stocks since Dwight Eisenhower's re-election or election in 1952, his election then. I'm just wondering, we saw a lot of movement there. I mean, it's tough for me to sit here and really get, is this going to continue? I mean, that's my question. How far is this going to keep going, or is it all overdone?
I think, Mike, I want to make a difference here. In our short-term trading strategies, we've got one view on things, and that basically is that a lot of the moves in different markets since the Trump election have been overdone, and we've done some trades there. And in our short-term trading, I want to stress, this is just like getting up and going to work in the morning. Okay, that's what that is. Listening to John Johnson right now, I've just got to say, when I back away from what I do day to day to make a living and look at my longer-term strategies, one of the things I have been doing the past couple of months is adding to my hedges against the Canadian dollar falling. That's over, the next couple of years, where you keep the time frame of the trading or the positioning you do in sync with the time frame of your analysis. Our short-term trading, that's one thing. Our long-term strategies are different. In the short-term trading, before we wrapped it up at the end of the year, I said, we got out of our short gold. We've been short gold from July. I thought gold had fallen too far too fast. I've not been nimble enough to buy gold. It's up $50 from the middle of December, but at least we're out of the shorts. On the bond market, we thought interest rates went up way too far too fast, and we took positions for interest rates to fall back down again using options in the bond market. That's worked out. I tell you where we've been wrong. I thought in middle of December that the U.S. stock market had gone up way too far too fast. We bought puts, limited risk positions, on the stock market, the S&P 500. We've been losing money. We're down about 50% on that particular trade. But again, it's a limited risk trade. We will not add to that trade unless the market rolls over. So, there's three markets where we thought that, and the other one, obviously, the U.S. dollar. The U.S. dollar has, I think, I'm continue to be longer-term bullish on it, but short-term I think it's kind of way overbought, so I do not want to be a buyer here, but I certainly don't want to be selling the U.S. dollar short.
Give me the 2-minute on crude oil.
Crude oil, I remain bearish on crude. Joseph Schachter and I swap a lot of information back and forth. I really like his take on it. What I call the supply-demand inventory story, I think, is bearish on crude. There has been a huge amount of bottom picking in the crude oil sector this past year, and, it's been a great run. We've doubled, basically, from $26 to $52 in WTI prices. But right now, there are massive long speculative positions in what we call paper crude, in other words, in the futures market, where people have been buying this market here looking, for prices to keep running up to $60, $70 or whatever. If the market turns around, those buyers become sellers, and the short positions we have on crude, look good. So that's my thought here. I think crude's overdone here at $50, $55. I'd look for it to turn the other way with this risk that the buyers in the paper market would become sellers.
And look, I just want to remind people that Victor Adair will be with me at the World Outlook Conference. It'll be a great chance to pick his brain, and that's the most exciting part about the World Outlook Conference. You get experts like Victor, who you get a chance to really get in depth with them and ask them a few questions. I look forward to it. I look forward to seeing you there, Victor.
I look forward to seeing you there too, Mike, and Happy New Year to you and all our listeners.